What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a concept that I have seen a lot of people bringing up again, and honestly, a lot of people are pretty confused on exactly what this means, and that concept is forced share recall. So if you've been following my channel for any extended period of time, we've talked about this concept in depth in the past. So in this video, we're going to go over exactly what a forced share recall is, what needs to take place in order for one of these forced share recalls to occur, and how likely is it that AMC is going to be witnessing one of these forced share recalls either this week or even in the near future. Now, we also have some other things to go over. We have the vote, the SATEC vote that is coming up before earnings tomorrow. We have new institutions buying a hefty amount of shares of AMC and a brief earnings preview that we need to cover. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So again, AMC closed Friday trading at $33 flat. Now, this is one of the most important things that I still want to bring to your guys' attention because there is still time to vote. Do you have any plans to offer a dividend again? This is the question that everybody is upvoting. 66.6 million shares have voted on this question with 62.6 thousand votes. As I've said before, this SATEC vote with verified shares, since you have to basically link your brokerage account, is the best and maybe only way we are ever going to get essentially a realistic number for how many synthetic shares are out there for AMC at the current time. So if you are in this AMC play for the short squeeze, this is something that you need to do. This is going to help potentially expose the synthetic shares and give us even more conviction in our decision to put our money behind AMC. Now, moving on and taking a look at the institutional ownership changes of AMC shares over the last quarter, we see some pretty interesting things. So Swiss National Bank right here increased their position size by 325% and now holds 832,000 shares of AMC. We can see that Wolverine Trading has taken a pretty substantial call and put position on AMC to play both the upside and the downside for this stock going forward. And we also see that Lincoln Variable Insurance also has a position of about 351,000 and increased their position size by about 8%. So it is always good to see large institutions continuously buying more shares of this company because it shows that they still believe that there is upside. Now, the one thing that we have to mention when we're talking about these 13F filings is that they are extremely delayed. The effective date of all of these filings was before the June run-up. So it is entirely possible that a lot of these institutions have sold their position, but again, we're going to have to wait for the next round of 13F filings in order to get a better understanding of where a lot of these institutions stand with their position on AMC. Now, taking a look at earnings, so tomorrow is going to be a very eventful day. Now, I know a lot of people like to say that fundamentals don't matter when it comes to the short squeeze, and you would be right in the mechanics of how a short squeeze plays out, but what I would say is it's always better to have good fundamental news for any company that you are investing in versus bad fundamental news. It just gives a better feeling and a higher level of sentiment to the people that are investing in this company. So we see that this movie theater operator is expected to post a quarterly loss of 0.91 per share in its upcoming report, which represents a year-over-year change of an increase of 83.3%. Revenues are expected to be $341.3 million, up 1,705% from the year-ago quarter. If AMC is even able to exceed these expectations, that is really going to show us that not only has AMC really just showed all of these shorts that their short thesis is invalid, but they are going to show retail investors that this company is sticking around for the long haul. Now, when we get into this forced share recall situation, a lot of people saw this tweet right here where it's talking about AMC. Here's a story of KBIO. Its stock rose 10,000% in 5 days when it announced a forced share recall. Now, there is some misinformation in this tweet, but again, it is a tweet, so it is hard to put some in-depth analysis into what you are saying. The the stock rose from 44 cents all the way up to $45, and this individual is suggesting the same thing could happen to AMC when those lending shares see billions of fake shares. So what is a forced share recall? One, what you have to keep in mind is the company AMC cannot issue one of these forced share recalls. Only the prime brokers, which are the main lenders, so we should clarify that anybody lending out their shares are the ones that can issue one of these forced share recalls. So right here, the opposite of forced selling in a margin account is a forced buy-in or a forced share recall. This occurs in a short seller's account when the original lender of the shares recalls them or when the broker is no longer able to borrow shares for the shorted position. This last sentence is incredibly important. It has to do with utilization. So let's basically say this again. When the broker is no longer available to borrow shares. So this has to do with utilization. When we come over to Ortex right here, the utilization is essentially the amount of stock that institutions are willing to lend versus the amount that they have already lent out. So AMC right now is at 92.39%. That is incredibly high for any given stock. Now, what are the kind of statistical and analytical analyses of when these forced share recalls can occur when the utilization is so high? So we're going to go back to this Reddit post right here. Shout out to Lee Matt N for posting this a couple of months ago, and it has to do with this research report put out by a University of Notre Dame professor. So short selling is risky, borrowed shares may be recalled, and the short seller may be forced to terminate a position early. So coming down a little bit further, we can see that right here, for easily borrowed stocks, I estimate that a forced share recall occurs about once in 8 years. So for stocks with utilization above 75%, forced recalls occur once in about every 26 days. So that is just when a stock has a utilization of above 75%. And AMC, as we can see right here, is up in the 92.39% range. But what we have to take a look at is the previous utilization history. Back in June, right here in the beginning of June and the end of May, the AMC utilization was incredibly close to 100. Now, right here, when we see this drop in utilization, is right around the time that we saw the very significant run-up in AMC when we saw that gamma squeeze and FOMO rally in June. So it is entirely possible that these institutions could not get their hands on more shares in order to lend and issued one of these forced share recalls because it was incredibly risky for not only themselves as the lenders, but for their clients as well. So here's something that everybody needs to understand. Nobody really knows when these forced share recalls occur, but at the same time, when we come over here, this is from BNY Mellon, lenders can recall their securities whenever they want, for whatever reason they want, and they do not have to provide an explanation. All they need to do is ensure the request is made in good time so that we do not interrupt their investment life cycle. So here is essentially what this means. The prime brokers in these lending institutions who are lending out their shares of AMC to these other institutions to short are just as complicit in the manipulation going on with this stock. They have enabled these other institutions to over leverage on their shorts on AMC, and it seems as if they are not really doing anything about it at the current time. The example that I have used in the past to really figure out who is to blame is, let's say an individual gives a child about 10 pounds of candy. The child eats the candy and then they get sick. Well, yes, the child, and in this analogy or metaphor, it would be the hedge fund, is the one who actually ate the candy, but the person who gave it to them is also equally as complicit. So what we really need to look for going forward is this utilization number that we see over here. If we can get above 95% and even closer to 100% again, then yes, a forced share recall is very likely to occur, but with 92.39 showing right now, it does not necessarily show any signs of a forced share recall occurring, even with the amount of data that we are seeing from SATEC, even though we know that the prime brokers and these lending institutions can recall these shares at any time. So honestly, this could play out on any day that these institutions see fit, and we are essentially playing a waiting game in order to see what is going to happen. But forced share recalls are on the horizon if we continually see the utilization go up, which is extremely bullish for AMC. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.